Gold's upwards direction seems to have been maintained last week, yet is currently lower than Monday's opening figure. In today's report, we are going to discuss the possible implications of the Fed's interest rate decision and the precious metals price. For a rounder view, we are going to conclude the report with a technical analysis of gold's daily chart. The Fed's interest rate decision is set to occur later on today. The majority of market participants are currently anticipating the bank to remain on hold in their meeting tomorrow, with Fed fund futures currently implying a 99.5% probability for such a scenario to materialize. The market also seems to expect the bank to proceed with a rate cut in the June meeting, with a second rate cut potentially occurring in October. Nonetheless, with the markets having almost fully priced the possibility of the bank remaining on hold, our now attention turns to the bank's accompanying statement, in addition to Fed Chair Powell's press conference, which is set to occur half an hour after the decision. The first impact may be seen following the bank's accompanying statement, with a secondary effect emerging from the press conference. Overall, should Powell's press conference and accompanying statement be interpreted as predominantly hawkish in nature, implying a prolonged period of time in which the bank could remain on hold, we may see the event aiding the greenback while weighing on the precious metals price given their assumed inverse relationship. On the other hand, should the accompanying statement and Powell's press conference be perceived as dovish in nature, it may weigh on the dollar while aiding gold's price. Lastly, should the two events appear to contradict one another, it may lead to a mixed market reaction. In our view, we would not be surprised to see the Fed taking a step back from the possibility of aggressive rate cuts and references being made to the administration's policies and their possible impact on the Fed's dual mandate. On a technical level, gold's price continues its upwards journey, venturing close to the 2,788 resistance line. We opt for a bullish outlook for the precious metals price, and supporting our case is the RSI indicator below our chart, which currently registers a figure above 60, implying a bullish market sentiment. Moreover, supporting our bullish outlook is the upwards moving trend line, which was incepted on the 30th of December. For our bullish outlook to continue, we would require a clear break above the 2,788 resistance line, with the next possible target for the bulls being the 2,840 resistance level. On the flip side, for a sideways bias, we would require the precious metals price to remain confined between the 2,740 support level and the 2,788 resistance line. Lastly, for a bearish outlook, we would require a clear break below the 2,740 support level, if not also our aforementioned upwards moving trend line, with the next possible target for the bears being the 2,690 support level. Those were the top financial stories for this hour. From all of us here at IronFX, we wish you a